Hi, friends. If you have been watching the rates lately and feeling confused, you are not alone. Rates have just moved up again, and a lot of buyers reach out to me asking the same questions. Should I buy now or should I wait? According to Freddie Mac, the 30-year fixed mortgage rate was 6.22 for the week of March 19, 2026, up from 6.11 just 1 week ago. So yes, rates did move higher again. But here is the part that many buyers miss. A rate headline doesn't really tell you whether buying right now makes sense on your unique situation. My name is Mike Najam. I'm a realtor and a loan officer here in Florida. And on this video, I want to help you think through this the smart way instead of just reacting to headlines and news. First, let's talk about what a rate increase actually means. When rates move up, it actually affects the affordability. In other words, your monthly payment. And sometimes, of course, it affects how much house you can afford and how you feel when you are shopping around for the houses that are within your budget. But that doesn't automatically tells you that you should stop your home buying plans. What it really means is that you should try to get a better strategy to check for better numbers or actually find the best structure for the loan that best fits your plans. Another important point that you should be aware and know is that the actual rates that you are seeing on the headlines and the news is actually just the national average rate. It doesn't necessarily mean it's the same rate as your personal quote because your options depend on things such as your credit profile, your down payment, the occupancy on the home, the loan type, the property, and the timing that you have for your unique situation. Making this distinction is actually really important to you. A lot of customers think that the market headline is the exact same rate as they would personally get on their unique situation. And that's just not how the mortgage pricing actually works. So, what should buyers actually do when rates move up? The first thing that you should be doing is actually to stop asking only what is the current rate and start actually asking how much are my monthly payments and what is the best loan option for my situation. And why does the payment matter so much, Mike? You should be asking. And it's because the monthly payments are actually what you live with every month. And the right loan setup is just as important as it is the small movements that you see on the interest rates on the general market. For example, one buyer might need or might be better served with an FHA loan. Another buyer, in the meantime, might be better served with a conventional loan. And another third buyer might need a totally different strategy, might need seller concessions, a change on reserves, or a different timing approach on their loan. This is exactly why I tell buyers to not shop by the headlines or news, but actually shop by the fit, by your payment comfort, the cash to close that is required, or the overall plan that best fits your particular needs. Another thing happening right now is that the rate sensitivity is actually affecting the demand. MBA latest weekly survey show a mortgage applications fell 10.9% on the week over week, and the refinance applications also fell sharply. And that matters because when some buyers actually step back, some other buyers actually step forward because they know they will find less competition. So a raising rate week is not always bad news for every buyer out there. Sometimes it actually creates opportunities for the buyers who are actually prepared. That could mean more room to negotiate, less bidding pressure, and the chance to move with clarity. Now, let's talk about the biggest mistakes that rate leads make. They actually wait for the perfect rate without first understanding whether they already qualify comfortably where they are right now. Waiting can be actually smart in some scenarios, but waiting without a plan usually only leads to more and more uncertainty. A better move is to actually get to know your numbers and have them review right now. That way, you know what you qualify for, the payment range that actually makes sense in your case, and which loan options are the best or deserve your actual attention. And most importantly, you should know that actually getting a pre approval does not necessarily mean that you're locked into any loan program or lender. CFPB specifically explains that getting pre approved helps to show the sellers that buyers are more serious, but it does not commit the buyer with any lender, and consumers should compare loan estimates later on. And that is actually one of the smartest things that you should do on this and any market conditions. Get clear first and then compare intelligently. CFPB also encourages consumers to consult with multiple lenders and compare loan estimates because different lenders offer different loan structures, cost, and timing. So, if you are a serious buyer, here is the right sequence of steps that you want to follow. Step number one, actually get to know your buying power. Step number two, match with the right loan type for your unique situation. And number three, compare real offers. Don't just go for the headlines or advertising. And of course, if you don't feel like you're ready for this today, there is nothing wrong with that. It's absolutely okay. The goal here is not pressure, it's actually to help you gain clarity. Because once you understand your own numbers, you actually stop being emotionally pushed around between headline to headline. You actually start making decisions like a prepared buyer. If you are seeing rates on the headlines and news, wondering what they really actually mean for you, make sure you reach out and connect. I will be happy to review your unique scenario. Whether you're looking for FHA, conventional down payment assistance, refinance, or a more specialized loan path, the right answer starts with the right breakdown. You can actually reach out directly to me and I will help you understand your options, your payment range, and the best next steps. No pressure, only a real conversation based on your goals. Now, if this video helped, make sure you click subscribe because on my next videos, I will be breaking down and comparing FHA versus conventional loans. I will help you understand how much cash is needed to actually purchase your home and how to compare loan estimates the right way. This video is actually for general education purposes only. It's not a quote or a commitment to lend. Loan terms depend on qualifications, property type, program guidelines, and timing. Thank you for watching and have a blessed day.